Hi, I'm Rhys Gadsby, Glenigan's Economic Analyst, and welcome to our Glenigan Construction Review video for March 2021, which reports on construction activity during the 3 months to the end of February. Now firstly, let's take a look at detailed planning approvals to get an idea of what the future pipeline looks like for construction. And it is very positive to see that the value of planning approvals during the period were 24% higher than the strong performance we saw a year ago. Now this fantastic growth was skewed by major projects, which are those over £100 million, with them being 41% higher than the previous year. Now major project approvals were boosted in particular by two schemes. And the first one was the £3.5 billion Hornsea Project 3, which is a wind farm off the coast of Yorkshire. And the second was the £1 billion second phase of the Elephant and Castle Town Centre development, which comprises just shy of 1,000 flats. However, underlying project approvals were also really strong during the period, and they are all projects under £100 million. They were 14% higher than a year ago and 26% higher than the preceding 3 months on a seasonally adjusted basis. Now, thanks to the approval of several major schemes, the civil engineering sector achieved the greatest growth of all sector approvals. Approvals for the civil engineering sector were up 122% against the previous year, and this was actually despite underlying approvals being 9% down. So this shows you the impact that a project such as Hornsea Project 3 can have on overall growth. Now, the industrial sector's development pipeline continued to perform very strongly, with approvals climbing 55% against the previous year. Underlying industrial approvals climbed 57% against the previous year and 60% against the preceding 3 months. Now, turning to the residential sector, it is worth mentioning that despite major residential approvals being 43% down, underlying residential approvals climbed 26% against the previous year and 43% compared to the preceding 3 months. Underlying residential approvals during the period were at their highest since we started doing the construction review, so this is extremely positive news for the residential development pipeline. Now, let's take a look at main contract awards during the 3 months to February. And the value of those was 6% lower than a year ago. Major project awards fell 4%, while underlying contract awards declined 6% against the previous year. However, compared to the preceding 3 months, underlying main contract awards climbed 5%. There were a couple of sector bright spots, but I'm just going to touch on one, and that is from the civil engineering sector. Civil engineering contract awards were 19% higher than the same time last year. However, similarly to starts, growth was purely due to major contract awards, and they climbed 72% against the previous year. Underlying civil engineering contract awards, on the other hand, were 20% lower than a year ago and 5% lower than the preceding 3 months. Now, let's take a look at project starts during the 3 months to February. And the value of work commencing on site during the period was 1% higher than a year ago. Positively, it was underlying project starts that drove growth, and they were 3% higher than the previous year and 4% higher than the preceding 3 months. In contrast, major project starts struggled, and they were 11% lower than last year. Now, it is really positive to see that project starts returned to pre-lockdown levels, despite strict COVID restrictions being in place for the majority of the 3-month period. The recovery to date has been in line with our 2021 to 22 forecast, and the construction industry is poised for even further growth over the coming months as the vaccination programme helps to unlock the economy. Now, despite overall project starts being up on the previous year, most sectors were still heavily behind levels we saw last year. But there were a couple of sectors worth highlighting, and the first one is the residential sector. Residential work commencing on site during the 3 months to February increased 12% against the previous year, and this was despite major projects falling 55%. So therefore, it was underlying starts which were the driving force behind growth, having increased 30% against the previous year and 17% against the preceding 3 months. And this is really positive news for the residential sector, and is a reason why the residential sector had such a good 3 months to February. Now, health project starts were 9% higher than a year ago, with underlying health starts being 38% higher. However, major health project starts were 40% lower than the previous year. To learn more about construction performance for your sectors and regions, please download the latest construction review for free using the link in the description. But for now, thank you very much for watching, stay safe, and we'll see you again in April where we'll be looking at construction activity during the 3 months to the end of March.